Hello and welcome to a special Smaulgld report on Chinese and Russian U.S. Treasury holdings. Re-dollarization. Chinese and Russian U.S. Treasury holdings surge. Chinese U.S. Treasury holdings are now at their highest since October 2016, which was the last month that the People's Bank of China added gold to her reserves. Russian U.S. Treasury holdings are up 41% since October 2016 and are now at the highest level since November 2014. What's changed? Well, higher U.S. interest rates, a new U.S. administration, and improved Chinese and Russian financings have led to a surge in their treasury buying. This has all been predicted by yours truly. We're going to get into that, but first let's get a lay of the land. It goes counter to all of the de-dollarization, end of the dollar collapse stories that we've been hearing the past 4 or 5 years. I have been saying, yes, indeed, there are de-dollarization initiatives taking place, and I had also documented those, but I also noted that there would be a response. We're going to get to that in a second. China and Russia are working on their own digital currencies at the moment, but in the meantime, they are rebuilding their stacks of U.S. Treasury securities they sold off during the past few years. China was particularly troubled when the Federal Reserve embarked on QE in 2009. They were furious. They had been accumulating treasuries as part of their trade agreements with the United States. They were running a surplus and they were getting dollars and putting them into treasuries. And when the Fed then just decided to print up $4.x trillion to bail themselves out, well, China was very upset about that. And they undertook certain de-dollarization initiatives. Russia, and they started to sell off their treasuries, but not initially. They only did that in the last year or so. But Russia sold off a good portion of her treasuries after the U.S. and other countries slapped sanctions on Russia in 2014 after the invasion of Crimea. Now, Russia never had the same level of treasury securities that China had. At one point, China had over 1.4 trillion. Russia doesn't do much trade with the U.S., doesn't need to buy oil because it has oil. So it never needed a large U.S. Treasury position, but it did indeed sell off more than half of their treasuries. However, let's take a look. Russian U.S. Treasury securities are now at $104 billion, the highest since November of 2014. They're now at a 40-month high. China, you could see here, their holdings since October have crept up. Chinese foreign reserves at one point had been over $4 trillion. They were reduced to under $3 trillion earlier this year. They're now back above $3 trillion. And China has mentioned that they have an interest in buying more U.S. Treasury securities. So you can see now both China and Russia, the big de-dollarization demons, are adding treasuries. How did that happen and how did I predict it? Okay, so first of all, one of the memes that is out there that the Fed is there to protect the too big to fail banks. That's one alternative financial media memes. And the conventional mainstream media meme is that the Fed is out there to serve the economy. I say both of those are incorrect, that the Fed protects the dollar first and foremost through its monetary policy, because without the dollar reigning as a confident store of value and something that is required for international trade, desired as a reserve, the too big to fail banks' interests cannot be served unless they have that dollar hegemony, and the U.S. economy can't function unless the dollar is desired. So the Fed's primary concern is to protect the dollar. So back in April 2015, I wrote, does the Fed need to raise interest rates to combat de-dollarization initiatives? At the time, if you recall, in early 2015, that's when you had all of the pundits on the alternative financial media saying the Fed won't raise rates, the Fed can't raise rates, the Fed can never raise rates, insisting, talking about derivatives, whatever the reason was, it wasn't going to happen, it couldn't happen, it would never happen. In fact, the Fed was going to cut rates. Well, in June 2015, I said, no, the Fed will raise rates this year. And I gave the rationale that the Fed needs to protect the dollar, that the Fed needs to drum up some demand for U.S. Treasury securities because countries were stopping buying them and they were dumping them. And that would continue if the Fed continued with its policy. Also, the Fed did raise rates. And one of the things the Fed also did when it raised rates, it also had engaged in convincing the European Central Bank to do QE. And then all these other banks, and it's what's happening right now, they are in negative or flat interest rate environments. Bank of England, Bank of Japan, Swiss National Bank, European Central Bank. Well, that makes the dollar, that makes Treasury securities more attractive. Don't think they didn't orchestrate this. So when the Fed raised rates in December 2015, all the pundits saying, well, they didn't really raise rates. They only raised them a quarter. They're not going to raise them again. QE4 on the way, negative interest rates. And I said, no, the Fed will raise them again if they have to. They're not going to raise them the 4 times that they said they would. But I knew that they would raise them again. And I wrote in May 2016 why the Fed raised rates last year and will do so again this year. And when they did, well, everyone else said they were going to raise them to 2%. I was still right because they only raised them 2 or 3 times. Okay. Then I wrote in June 2016 how the Fed manages the dollar and avoids collapse. And I showed, and if you click on this link, you'll see a chart that shows how clever the Fed is. Had they come out in 2009 and said, guess what we're going to do? We're going to print over the next 5 years, $4.5 trillion. We're going to buy worthless mortgage-backed securities. We're going to buy every, or just about 70–80% of the newly issued U.S. Treasuries for the next 5 years, and it'll come out to $4 trillion. Well, the dollar would have collapsed, but that's exactly what they did. But they didn't announce it that way. They didn't do it that way. They did it in stages, and they're very clever because when the dollar started to feel the effects of the QE1, 2, and 3, guess what they did? They stopped. And then the dollar rebounded, and then they started again. Let's take a look at that particular article, and I'll show you in a chart. I haven't kept it up to date, but it's pretty spot on what happened. So here you go. Dollar collapses into the financial crisis. Okay. You can see when they launch QE, the dollar's up here. And then as it goes on and on and on, they have to stop it. And then, you can hardly see it, or sorry about that. They stop it when the dollar falls, and then when the dollar rises again, they start it again. And then you can see here what the Fed did was they did QE3, and the dollar fell, and then they stopped. See, every time the QE is starting to get long in the tooth, they stop it. And you see when they stop QE3, the dollar soared. Now, the dollar's still back in this area. This doesn't go through 2017. But you can see what they did was they create the circumstance where if they have to do QE or cut rates again, they've got to get the dollar back up. And that's exactly what the Fed does. They play it along as if they're prudent. And right now, and the reason they raised the rates the last 3 times was to regain the credibility that the dollar was a store of value. The Fed is a prudent bank. Same thing with this talk about unwinding their balance sheet. Exactly the same thing. All the other central banks are still buying bonds, monetizing debt, got negative interest rates, 0 interest rates. And look at the Fed. Having pulled off a $4.5 trillion money printing scheme, they're now acting like they're prudent. Well, it works. Proof in the pudding. There you go. You put bonds on sale, you offer interest rates, they buy, Russia and China. So, yes, maybe one day, de-dollarization, people will get fed up with the dollar, they won't use it anymore. But for now, the Fed has pulled off a re-dollarization strategy, I think, and have attracted foreign buyers once again. And those foreign buyers are very, very important. Why? Well, here's the story I wrote in October 2016, why Saudi Arabia matters in helping keep the U.S. dollar as the world's reserve currency. The United States is based on deficit financing. It needs foreigners to buy its debt. Well, The Fed knows that. The Fed has raised rates. They will raise them as many times as they have to keep that confidence. But if the dollar stabilizes and the Treasury bonds are being purchased and the other foreign central banks are still, we just got announcements on all the central banks. They have no change in plans. They're still at zero interest rates. They're not going anywhere. Well, then the Fed can start to hold off on raising rates, and they can just start allowing some of their balance sheet to roll off. Doesn't mean they're going to sell anything. It just means they don't have to. They'll just allow the maturing securities to expire. Thank you very much for listening.